Welcome everyone. Welcome my partners, Jack Adovo, Raj Sarangam, and my partner in TeamVelu, Ramu. And we are here to present multifamily investment opportunity. It is A-class property, 248 units in Dallas, pretty close to downtown Dallas. And there is a reason why we have moved from Class C to Class B to Class A now. And there is a huge demand, as we all know, and which Jack also will cover. And before I'm handing over to Ramu to read the disclaimer, I'd like to say that Jack Adovo, we met about 3 years back, and my daughter invested with him on the first deal, Saffron Village, and that was closed about a few months ago. And it is about 2 years or maybe a little bit more, and they were able to produce more than 100% return. He will give you the exact details on that a little bit. And apart from that, I'm partnering with him at least on four or five more different deals. And out of those five, couple of them are Raj's deal as well. Raj is also there in the deal in Houston. And and one of that is going to produce a 200% return, which within about 3 years' time. So those are all some success stories we have, and we will be able to provide you with flats at 2030 in Phoenix. That is the one which is exceeding the expectations in spite of all kinds of issues and all that. So with that said, they will introduce themselves as well. And Ramu is my son who has joined my team, and he's in the front end and servicing all the clients and helping with the investor relations. And this particular deal is also for sophisticated investors, not only for accredited investors. So with that said, Ramu, please take it over and let's move on.
Thank you, Dad. I'm going to start with the legal disclaimer. The information contained in this presentation is considered confidential, intended solely for the individuals to whom it's delivered. The circulation of this document or disclosure of its contents to any other party is expressly prohibited. The information is solely for the use of prospective investors to determine the level of interest in Clark Ridge Canyon Apartments. While the information contained in this presentation has been compiled from sources we believe to be reliable, none of the sponsors or their representatives make any representations or warranties to the accuracy or completeness contained herein. All financial information and projections are provided for reference only and are based on assumptions relating to the general economy, market conditions, and other factors beyond our control. All references to acreage, square footage, and other measurements are approximations and must be independently verified. Prospective investors are encouraged to conduct their own independent due diligence investigations, review financial projections, and consult with their legal, tax, and other professional advisors before making an investment decision. So let's get into meeting our lead sponsors, Mr. Raj, Mr. Jack, and Mr. Raman. I work with my dad, Raman Velu, and TeamVelu Investments and Realty, and I look forward to working with all of you investors as well. Please feel free to reach out to me. My contact information will be at the end. I have heard Jack's name several times, even before I came full-time with my dad, about the investments that we've partnered on him with, the ones we have personally invested with him with, and the performance of those investments doing very well. So very excited to partner with Jack and Mr. Raj once again on another investment that we hope to make great money on for the investors and also a little bit for ourselves as well. Let's start with Mr. Raj. Mr. Raj, can you introduce yourself, then Jack, then my dad, and then we'll get right into the presentation.
Yeah, just call me Raj. Thank you. Thanks, everyone. I know Memorial Day weekend, I know it's how precious that you need to be spending your time with your family, and you took out your time to come for this webinar. We really, really thank you from bottom of our hearts. I think after our we're going to excite you with this investment. My name is Raj Sarangam. I'm a president of ORP Investments. All three of us met in three of us, meaning Jack and Raman Velu and I. We were part of Bradshaw Rock. We teamed together. We invested in several properties. So with that background, I've been in real estate investments for 10 years and solely concentrating on multifamily for the last 4 years and partnering with Jack on almost all deals. We have done some deals outside of this, but for the last 3 years, Jack and I have been doing deals together. So we combined, we own over 2,000 plus doors in Texas, Arizona, and Florida markets. Our main bread and butter is going to be Texas. We own over 1,000 units. With that, I'll turn it over to Jack.
Yes, thank you very much, Raj. Can you hear me clearly? Hello?
Yeah, kind of okay. We can. It's pretty readable, but not perfect. Go ahead.
Yeah, we can make out, but it could be better.
Okay. All right. Let me see. Is this better now? I switch the headset here. Is that better? A little better?
Yes.
Okay. All right. Thank you so much, Raj. Hey guys. Thank you so much. As Raj indicated, and Ramu and Ben indicated, we're very, very grateful that you guys are joining us tonight to learn about this wonderful investment opportunity. There's really a lot to love about this, and tonight I can assure you, you're gonna by the end of the night you're gonna feel that it's time well spent. I just want to first of all take a moment, if there's any, anybody who was served in the military, to just say thank you for your service and for all your help, and making us safe and live the American dream. Thanks to those who have served and those who sacrificed their life for us. We're extremely grateful. Today, personally, my wife is off today, and we took our kids, to the arcade and enjoy a nice, relaxed Monday with the family, and that's because of those men that have sacrificed their life for us, and that's something we can never take for granted and should never be taken for granted. So if there's anybody who is in the military who served or is currently serving, we're extremely grateful and appreciate you for all your service. And so about this deal, I'm based in Boise, Idaho. I'm a full-time real estate investor. Me and Raj have done several deals. Me and Velu goes way back then. I remember meeting Velu 3-4 years ago at a conference in Dallas, and I'm like, man, this guy I really want to work with. This is the kind of guy. You just feel that synergy, that camaraderie and everything. And that's the one thing for sure. It's been a good run since then. I can't complain. I'm very blessed. I'm very grateful and extremely thankful for all the work and all the great job that Velu has done and worked with us on our projects. And I'm looking forward to this one as another project of us working together. It's a true teamwork, that is only successful because you get the right team coming up together, joining forces to make it happen. I tell you one thing, this is a sport. Everybody has a role to play. I have a role to play, Velu has a role to play, and we're looking forward to you joining us on this sport and this team, with your role to play as a partner on this deal to make it successful. Thank you so much, and we're looking forward to sharing all the details with you.
Yeah. All right. This is Ram and Velu. Thank you, both of you, Jack and Raj. They were pretty humble. They did not say how many deals they are on. They are doing quite a lot, and they're doing well. And so am I. After Ramu came, we have been presenting at least one deal every month, and we have raised over about $24 million. And we also have some more exciting deals coming up. And I'm full-time, and I'm very excited about the apartment investments for ourselves and for our investors. Thank you all very much for joining today. Happy Memorial Day. Back to you, Rama.
Thank you very much. Let's get started with the presentation.
Yes, thank you so much. So executive summary about this property. So this property is 248 units. It's built in 2020, Class A asset in Dallas, Texas. The good thing about this acquisition is the sponsorship team, which owned a property about 3 miles from this property and recently sold that for 3x multiple to our investors. It's a whopping 35% of IRR in 32 months. So why we are stressing on this is that the reason being is we are in the submarket. We understand the submarket. We understand the intricacies of the submarket and what we can do with this property and things like that. So of course, Dallas, as you know, has been the epicenter for the last 2 decades. In terms of corporate relocation, in terms of people moving, things like that. It has become 4th largest MSA. And then it's projected to be 3rd in next 10 years. That means more and more people moving in creates demand for multifamily, and that demand drives rents. Rents drive the price of the properties that we own. So this is how it works. So over 1 million added in last decade in Dallas, and it is not stopping, right? We have seen so many corporate relocations in last 2-3 years, and then so many people moving because of pandemic. The work from home culture has developed, and people are saying, why I have to pay exorbitant price in Northeast or West or Midwest? I can be in Dallas and be 50% cheaper than most major cities. Next slide. About the Clark Ridge, you can see some of the pictures to the left. It's a unique opportunity, I would say, because typically you see apartments in like it's a 3-story apartment, right? Normally that's what you see, but in this case, it's not only 2020 built. It's almost like you'll get a feeling like a single family home because it's a townhome style. So you can park your car in front and then walk to your apartment, and then there's a lawn right next to it, things like that. It gives you the home feeling like no other. So it is, even though it's called apartment, but you feel like you are living in single family home, okay? Because you have lawn right next to it, things like that. So it's only 1 story, and the developer has been there in that area. He has owned land for several decades now, and has been building real estate development in that area. So very well known, experienced developer that we're buying it from. So like any Class A, we have all the amenities that comes in, and of course, whatever based on our business plan, we are going to enhance those amenities like resort style swimming pool, fitness center, game room, so on and so forth, dog park, and all that. So Jack is going to excite you with those. He's going to talk about the business plan. It's truly experiential value add that we're going to bring to the tenants and the quality of life. Okay. And if you look at the amenities, interior amenities, they're all top notch. So it's mainly the exterior what we have to focus and give that extra amenities that people are looking for, and make them at home. So this is the South Dallas. It's very close to industrial hub. Lots and lots of jobs are moving into that. And it's only 15 minutes from Dallas CBD, Central Business District, and very close to downtown, makes it very attractive. And of course, vacancies being record low means demand is high, which pushes the rents higher. Okay. Next slide. Jack, you want to talk about this philosophy?
Yes, can you hear me? Can you hear me now?
Yeah, we can.
Okay, one. Yes. So guys, I think you know, as you look into this investment opportunity, I think one of the key things you want to understand is, you know, a little bit of, you know, the sponsor's viewpoint, the sponsor's mindset, and the sponsor's philosophy. You know, our ultimate goal of this deal, if we were to sum it into one thing, the ultimate goal is to double your money in the shortest amount of time. That's our primary goal. You know, forget about the IRR, forget about the cash on cash, because everybody wants to double their money. That's our primary goal. And in order for us to do that, certain key things must align. By the way, right, can you guys hear me clearly? No, last time I had an issue with my phone. Can you hear me clearly, or I need to change my
Yeah,
headset?
we can hear you now. Yes.
Okay, wonderful, wonderful. So, back to what I was saying, you know, certain key things must align. And I think as you evaluate this deal, I think it's very prudent that you understand that in terms of how we view things beyond just this project. And this applies to this project and any of the project we're working on right now. So, and that can be summarized into three things, right? Our philosophy, right? So, in terms of philosophy, we only acquire properties in markets that we know to be landlord friendly. And that's very critical because in order for us to come into a deal like this and be able to, you know, turn around and make a profit in the shortest amount of time, we must be in a state that we know we can do our own business without government, or rather in this case, local state government getting in our way. And Texas is one of those markets, you know. Another reason why we have a big presence in Texas because of that. So we have to be in a landlord-friendly state. We must be focused only on, you know, primary and secondary markets in those, in that. So the first thing is the state level, right? The state level must be landlord-friendly because that's really important. The second thing for that is the market we are in. It has to be a primary and secondary market. And why, if you're wondering, why? Because, you know, some people, like, for example, you know, go to a small town and everything. With us, you know, it's one of those, you choose your battle and be good in your in the battlefield, right? So to speak. And in this case, primary and secondary market is the market we choose our battle as our battlefield. And what I mean by that in this case, we want to be in a market that has a good supply of everything we need, all the ammunition we need. You know, in this case, the ammunition we need is, you know, a good flow of tenant base, right? A good flow of employees, right? If we lose an employee, we don't have to wait a month to get somebody else. There's somebody next day we can bring in to, you know, replace that employee. You know, if you're looking at vendors, no matter what project we're working on, there's a good supply of vendors in that town, right? And so the market itself has to have a good supply of those. And that's the reason why we're pushing for this. And of course, you know, in the next point is kind of also aligned with that, you know, the growth, the employment growth, the job growth, and the income growth has to be well above the national, right? Because the way we're thinking it, we want to double your money in the shortest amount of time. In order for us to do that, we must be able to increase rent by a certain amount. We must be able to increase other income by a certain amount. And so we want to be in a market where we can go in and if we increase the rent, it's not like everybody's going to move out in droves. They'll still be fine with it because, you know, they can afford it, they can live with it, and that's the primary focus, right? And of course, the sub-market itself has to be really good, strong sub-market, the top sub-market, with very, very safe area. I tell you, like Barry indicated, one of the projects we worked in that just sold about 3 months ago, not 3 months ago, in late March, so a few weeks ago, late March. That property, we held it for about slightly over 2.5 years, and when only said and done, invested at 2.7x equity on the return of the money, right? So then way more than double that money in the shortest amount of time. And in order for us to duplicate that, the sub-markets must be able to support it. In this market, we know this market very well in Dallas. It's very close to our other property. That property, we never had any criminal issue or anything. There might have been an issue, one or two, the entire holding period that might have been reported, but it's very, very safe the entire time. No murder, no nothing, no issue. And that's a key requirement for us because we want, if we're going to try to attract certain demographic, the environment must be appealing, must be comfortable, must be safe for them, such that they come in, they see what we can do for them, what we can offer for them, they fall in love with it, and stay longer and pay a little bit of an extra change in return. That's the first thing. The second thing is the guiding principle, right? And we act as fiduciary to our investors. Our primary focus is the preservation of your funds. We want you to have a peace of mind that your money is safe. First and foremost, right? That your money is safe. But the second to that is that we are having the best utilization of your money in the sense that we basically come in and all of a sudden that $100,000 you invest in become $200,000 in the shortest amount of time. So that's very key. We recognize that everybody is a team player, like I indicated earlier on, which means, whether they're a tenant, an employee, a vendor, an investor, everybody has a role to play in this game. And everybody must be respected. Everybody must be, recognized for what they're doing, because without them, we're not complete, right? Without a vendor, we're not going to do our business plan, right? Without employees, we're not going to be able to get the tenants to sign the lease and pay the rent on time. So everybody has a role to play. Without you, we can't afford this property. It's beyond our control. So everybody has a role to play on this game, and treating everybody with respect and integrity is key part of that in order for us to achieve, the set goals. The value-add proposal. If there's one thing, you guys probably have, I'm assuming have several things, on your plate to consider. At any given day, I'm assuming you probably had 2-3 other offers on the table. And so you wonder, okay, what makes Velu's team worth it? Why should I invest with Velu's team? In this case, you look at the track record, right? And what the sponsorship team has done. And you're going to look at it in terms of the sponsorship team's overall experience, right? The sponsorship team in this case has over 2,000 units, and majority of those are in Texas, right? The sponsorship team has executed properties, has operated properties in this sub-market. It's not like this is a new market where they're trying to, try the, test the water. They've been here, they've been battle tested, they know the market, they know what works in this market and what needs to be done in this market to execute. So the sponsorship team as a value-add proposal is we bring up experience in this case. And if there's one thing, I want to say, which is kind of going to be repeated throughout this property, remember one thing. This is a Class A. Previously, you've only had a Class C as a value add, right? 70 assets. As a matter of fact, Velu and I involved in a number of 70 assets. In this case, we're buying a 2020 built asset, and we're telling you that you're going to get 100% return on your money. How do we do that? It goes to the last thing I want to say, which is value add as a function of experience and quality of life. And as we go through the rest of this presentation, we'll show you what we mean by that. That you don't have to invest in, C-class. You don't invest in deep value add to get the same returns. What makes this attractive is the fact that you get a brand new asset, stabilized. You don't have to rip off the walls, the start to achieve your stated returns. You can still get the same return, the same profit with less work. It's like what they say, work smart, don't work hard, just work smart for the same return. That's exactly what we're trying to do here. So we look forward to sharing that with you in more detail in the next several slides.
Thank you, Jack. So we talked about the property, we talked about our philosophy and how we invest and what we look for, things like that. Now, what is it in terms of for the investors? The return is going to look like. We are offering Class B. This is an illustration of projections for $100,000 investment. You can see it's very light year 1, year 2. Year 3, we are planning to do a refi cash out, and almost 75% of your money will be returned. So you can take that and reinvest in some of the deals and things like that. So as you can see here, most of the money is returned in year 3, and then we have some in year 4 and year 5. So total cash on cash, you're getting about 88%, and then about 12% through profits and sale, giving you 100% return. So average cash on cash, including the refi, is 20% or higher, and 2x, and total returns is 100. So again, there's always a chance that we have 2 of our properties. We are doing this where we are doing a refi cash out, and we have seen, after a year or 2, we probably decide to sell or things like that. So this process has been, Jack is going to talk a little bit more on this, but this process has been vetted out in our other properties. Similar approach is being taken here as well. Next. Okay, before we go to anything, why multifamily? So multifamily, as you know, is a recession resilient type of investment. What I mean by that is people need place to stay, and government incentivizes operators like us to invest in multifamily, because government cannot provide everybody homes or apartments and things like that. So they intensivize people like us to own apartments and things like that. So it's a stable and safe. When I say safe investment, what I mean by that is conservation of principle is key in this environment, right? You don't want to lose your hard-earned money. So that's what I mean by safe. So it's a recession resilient investment, and then it's a what you call like mail check money or ACH money now. So you don't have to even go to the mails to check, look for a check. So it's a consistent passive income, and of course, it's tax benefits. People invest in real estate for tax benefits. The cost seg study for this one came out to be around 100% in year 1. Again, you'll have to talk to your CPA to figure out if you can avail that tax benefits. And the 5th point, if you look at it, it's a leverage return. What I mean by that is, only in real estate, and especially in multifamily, you can get up to 80% loan, and then the rest you'll have to put down, like 20% down, right? So that's a leverage return. So you're using somebody else's money to make money. And last but not least, during the inflationary times, people tend to invest in hard assets. What I mean by hard assets, like gold, silver, farmlands, real estate lands, things like that. So people tend to invest in these type of investments, and of course, multifamily is one of them. So it's hedge against inflation. Some of the features of the property itself. One of the things is you can see it's a well-designed floor plan. It's in Dallas, so you've seen the phenomenal growth in Dallas market. The other significant thing is, Jack will talk to you guys a little later, is rents. Rents are below a market, and he will explain why it is, and then what recent trends we have seen in market trends and how do we achieve them, right? And also there's a significant upside in other income that we can introduce. And then we can, when we go to the pertinent slide, you can see this property is, we got a property management company to come in at 2%. So there are significant efficiencies in terms of operational efficiencies, in terms of expenses and payroll and other things. And the other thing is this property is only 15 minutes from the downtown and right next to the highway, makes it very, very attractive. And residents have direct access to the highways and all the transportation nodes. Next slide, please. So investment summary to the left, if you see, the address is displayed, number of units is built in 2020, buying it for 54 million. The equity we're going to raise is about 18 million. Entry cap rate is 3.9 and exit is 4.75. And then occupancy is 95. So again, we are planning to do refi cash out in year 2 to 3, right? And return most of the investors' money. To the right-hand side, you'll see it's Class B. We're not offering Class A on this one. It's 80-20 split with 20% annualized return. We're projecting 2x returns with the IRR of 18%. The profit split changes to 50-50 after we give 2.15x, equity multiple of 2.15. So the biggest thing to note here is the tax savings, 100% on year 1 due to cost and bonus depreciation. Slide. So equity sources, we have about 70% in the senior debt. We have almost 19%, 20% with preferred equity, and the rest is common equity. You can see the loan amounts are displayed here. Important thing to note here is we are putting in substantial capex of 744,000. Jack will explain during the business plan slide. And again, it's a interest-only loan. Right now, it's offered at 4.5%. Next slide. Okay, Dallas market. I want you to focus in the top left-hand corner, which is cost of living index. If you see top metros in the US, the cost of living index for Dallas is 108. Compared to New York, if you go all the way to the right, where New York is 245. This is the main reason, cost of living index. And the second reason is being geographically located, where it is. It is centrally located. You can go to east or west within 3 to 4 hours. So that's what makes it attractive for companies to move to Dallas. And then you'll see to the left middle section where you'll see the United States diagram. You see all the companies that are moving in to Dallas, okay, either expanding or moving their headquarters to Dallas, okay. And then you'll see at the bottom left, you'll see all the companies that call Dallas their home, okay. To the right-hand side top corner, you'll see the growth. So one of the investment philosophies that Jack mentioned is population growth, income growth, job growth, and Dallas fits these bill, right? So it has become 4th largest metro in the US, growing at 20.4 since 2010, expected to go still at 16%, which is phenomenal, which is much above the national average. The only thing I want to call out in the right-hand side bottom section is a low cost of doing business. See, Dallas is less than 100. So which makes it very attractive for companies to move to Dallas. Next slide. Yeah. So this slide, what is showing is number of companies moving their headquarters to Dallas. Okay, so again, northeast leads the way, west, Midwest. We've seen from south, from Florida, Georgia, even Houston, San Antonio, Austin. Tons of companies moving into Dallas. Okay, and the list of the companies which are moving to Dallas are given in the left hand bottom corner. Next slide. So here, the migration patterns are shown along with the rent growth. As you can see, Dallas is growing at between rent growth is between 4.7 to 6.9. So once you guys look at the financial projections, we are not counting on this sort of we are very conservative, and we are only estimating conservative rent growth. They're not going at this rent growth, okay? But Dallas is growing pretty fast, and then that creates demand creates rent growth, okay? Next slide. The thing I want you guys to focus is on the left-hand side. You see job growth, corporate expansion, Fortune 500 companies moving, robust demand. So all the philosophy that Jack talked about, our investment philosophy, Dallas fits the bill and some, okay? And then to the right-hand side, you will see all the Fortune 500 companies that are located in Dallas. And it's slew of companies. We have telecom, we have energy sector, we have logistics, we have oil and gas, we have medical, so we have financial, we have insurance. So it's a slew of companies, right? Not just depending on any one sector, so to speak, okay? Next slide. Here, I want you to go to the left-hand side, and you can see cost of doing business. Dallas is at 96, right? So anything less than 100 is means that the cost of doing business is better, meaning like it's cheaper city for people to move in. Whereas if you look at San Francisco or New York, they're more expensive. San Diego, Boston, all these are more expensive places. Okay. So, and then the top 10 markets by population growth. This is again our philosophy, right? If you look at it, Dallas Fort Worth is at 7.4. That's in the middle section. Okay. It's growing at 7.4 between 2017 and 2022. And then it's still growing at 5.3 2022 and beyond. Okay. So if you see the population growth in last between 2010 and 2018, it's almost 16.9%. The biggest thing to look at is the right-hand side bottom corner, where you'll see the rent trends, average rent trends. They're going higher and higher and higher. That's because the demand is higher and higher. Okay, next slide. With that, I'll turn it over to Jack. He's gonna excite you with the submarket and the property and the business plan and the financials. Over to you, Jack.
All right, wonderful. Can you hear me clear?
Yeah.
Okay. All right, wonderful. Thank you so much, Raj. I appreciate it. So, guys, as you can tell, we are trickling down, so to speak, right? So we spoke about the state, right? The need to be in the right state that supports you and want you to grow and flourish in this business. And we go down to the primary and secondary market. In this case, the Dallas market, right? That meet the fundamentals, has the right supply of labor force, employee, tenants, and everything. And now we're drilling down to in the sub-market. One thing I want to point out, as far as the Dallas market, as you can see, one of the slides Raj mentioned, he mentioned about one of the key statistics was 140 144, corporate relocations to Dallas in, since 2010. I mean, if you do a simple math, 2010 to 2022, that's basically 144 months. So literally, another way to look at it is since 2010, every single month, there's been a corporate relocation to Dallas every single month. I mean, that's really huge because don't think about it just as a corporate location, but think about it in terms of the upline and downline, the industries and other employers that are at work or coming to work because of that corporate location, right? And so it's not just, them moving their staff here, whenever those staff come in, and they tend to be well-paid staff, right? These are not, cheap employers. They tend to be very high-end employers. And, whenever the staff come in, think of all the, just local restaurants that have to stay open, the local salon and the local barber shops and everybody else that has to be, operational to support those, those new employees that are coming to town. So it's a true benefit. And that's one of the best ways to know if a market is great is by the number of relocations they're doing, which means, other cities in, other states in the U.S. are not doing a good job with treating the employers right? So that's why the employers are moving to, places that will treat them nice and be more conducive with everything. So there's a lot to love. So the sub-market itself. Now let's talk about the sub-market where this property is. Right now we're drilling down. We're going to drill down all the way to the property level, right? And now we're down to the sub-market. This is definitely one of the booming sub-markets, especially in the distribution facilities and the logistics area. If you as everybody knows, that the market we live in right now. Hold on 1 second. Sorry, I have a 4-year-old screaming here. Hold on just 1 second.
Yeah, no worries. So this is actually a Class A property, and today I was called.
My apologies.
Ready back. Yeah.
Yeah, sorry. When you're a 4-year-old, the house is always fun with noise, right?
Yeah. Go ahead,
Sorry
Jack.
about that.
We are at 8:47. Probably we may have to fasten the presentation a little bit. Yeah.
Okay. All right. Sound like a deal. Yes. Yeah. So definitely. Thanks for the time reminder. So the sub market is definitely really huge. In terms of just the growth that's going on in the sub market. In the age we live in, the technology age we live in right now, right? Everything is becoming basically online, right? Everything I'm sure all of you guys have ordered something online, and the distribution facility is becoming a key part of our life. And so if you have a property in a place surrounded by distribution centers, you're going to have a good supply of tenant base. And that's very key. On this slide, I just to skip forward, I just want to point out a few things. If you take a look at that graph there on top, as you can see, in 2021, the rent growth in this market was over 11%. In this year, it's going to be at least 8%. But on our underwriting, we're only assuming 4%. So we're assuming half of what Costa projecting. That number, that graph you're seeing is from Costa, so industry report, and which goes to show just how much the market is growing in terms of rent. So when you say there's room to grow in rent, it's not just us thinking that it's possible. Of course, you guys all know this is Dallas. The rent's growing like crazy in Dallas, and it's good to have the industry there to support it. I'll skip to the next slide just to save time. This is the property overview. I'm not going to go through this in more detail just to save time. Of course, Velu will be sharing this with you so you can see it in more details.
Yeah, it will be saved on the portal, guys. Yeah, go ahead.
All right, next slide. Okay, so this property amenities on this property, and I'll point out that during the business center, when it comes to interior, the seller's done phenomenal job. Pretty much everything done on this interior. Most of our work is going to be on exterior, and I'll give you the backstory behind the exterior work, on the next slide. This is pictures of the property, so you can at least, have a view of how it looks on the inside and the exterior. This is exterior. It looks nicer right now. This is winter. This was taken in the winter. So right now it's more green and lush than what you see right now. Is our concept of potential things we'll be doing to the exterior. And I'll be going over that, during the business plan discussion. Okay, so business plan. So this is probably my most important slide, of the entire, discussion. This is where we basically tell you what are we going to do, to double your money in the shortest amount of time. One thing I want to say, this is what we are going to do for the next 5 years. I'm only going to spend the next 2-3 minutes talking about it. If you want to discuss about any of the items here in more detail, please, please, please give us a call. We'll be glad to go over this in more details with you and answer any question you have. So with that in mind, a little bit of backstory about this deal, right? So this deal came on market in 2020, March 2020 to be precise. And as you know, in March 2020, that's when the entire country went on lockdown, right, due to COVID-19. So the seller had was caught up in the middle, basically. Here he is, 248 units coming online, finally got the government, certificate of occupancy approval, right? That's what you must get in order for you to lease the units. So he got most of it in 2020, March of 2020, around that time. And the entire country went on lockdown and he could not find any tenants. So what did he have to do? He had to give a lot of steep discount in order to, get the unit leased. And let's face it, any property, any new property, even a normal market, in a good market that's going to lease up, will always give some kind of concession or reduce rent in order to get the unit leased. It's just the normal way of trying to get leased on time, it's one of those things. Would you rather, give a tenant $100 off or let the unit be empty for 3 months because you're trying to lease it at full market? From an economies of scale, you're better off just giving that discount and get it leased and getting that money in than an empty building. But in this case, it was even worse because the seller not only had a brand new 248 units to lease up, but there's nobody moving here, but it's locked in, or rather, on lockout, right? Nobody was moving. And so seller had to give as much as 40% discount in rent to get the unit leased. So when we say this room to grow in rent, it is a true room to grow in rent. And I'd like to give an example. The example I'd like to give is the deal TeamVelu and I are involved in, the one we just sold, a few weeks ago. I'd like to give a good comparison, side-by-side comparison. So this property was built in 2020, okay? That other property was built in 1985. In other words, that other property was 35 years older. That 35-year-older property did not have granite countertop. This property does. That other property did not have stainless steel appliances in every unit. This property does. That other property did not have washer and dryer in every single unit. This property does. That property did not have, smart package appliance. Smart packaging technology package. This property does. It didn't have the nice amenities like covered parking, carport, and garages and everything. This property does. And the surprising thing is, this property is basically getting about the same rent that property was getting. So you asking yourself, why is this property getting the same rent when both of them are in the same submarket? This property has everything better than the other property, and the only reason is this property came on market in the middle of COVID-19, and the seller had to give steep discount in order to get the unit leased. And the good news is, that's where we come in, because the seller is now selling it and we're coming in, and a lot of those units are now coming up for renewal, and we come in and charge the full price because we're no longer in the lockdown period. The property now stabilized. As a matter of fact, there were waiting lists, so there's a lot of people that want to rent this place. And We can change full price. So when we say there's $300 in over $300 in rent gap, yes, you bet there is. Other income, as part of that same concession, the seller was not charging full potential other income simply because it was in the leasing mode in the middle of COVID-19. And whenever you're leasing, you always don't want to charge full price on everything because you're trying to get a unit lease. Your primary goal is to get a unit lease. So we're coming in and changing other income. There's over $100,000 in other income on this property. So there's room to grow in both rent, other income, and everything else. And we look what, maximize on every one of those. Exterior and interior improvement. So when the seller had a plan on finishing exterior amenities, but when he got caught up with COVID-19 and giving steep discounts, there's a lot of exterior amenities that the seller had to abandon. And that's where we come in, because now we can come in with fresh capital to be able to complete a number of those. This is a Class A property, but it doesn't have a grilling station. It's surprising. Like, hey, why would a Class A property does not have that? And simply because the seller got caught up in the middle. He ran out of money, and now we're coming to do that. I'm just so happy that he focused on the interior, because interior, you don't need to do anything else on the interior. So from interior point of view, nothing needs to be done. We're just coming in and doing on the exterior, which goes back to that slide we had mentioned, which is value add as a function of experience and quality of life. In this case, our value add is not necessarily ripping walls to the studs and upgrading interiors. Our value add in this case, improving tenant experience. Grilling station, amenities of the dog park. There's really nice 2 dog park, very huge dog park that doesn't have amenities in them. We're gonna put nice table, chairs, stuff for dogs to play with. The pool area, we're gonna throw in some gaming areas and all that stuff. Add grilling stations. The focus in this case is to improve tenant experience. I give you another example. The property TeamVelu and I just sold a few weeks ago. That property, when we took over, just by adding amenities, was enough to make tenants wanting to stay and paying new rent without the units being upgraded. They were like, yeah, I'm fine paying the new rent. Let me stay in. I love this place now because I love all the amenities that you guys are doing. The experience is better and all that stuff. And so that's what we're bringing in this case. We want to improve the experience. We want to make them feel home. This property is already designed and built like a single family, complexes. Every unit, it's all single story. Everybody has their own front porch. You don't have to climb through the stairs or anything, right? You have your own little balcony. It feels more like home. Just with added amenities that apartment comes with, like a swimming pool, a gym, and everything. And all we need to do is just, come in that doors. Operational excellence and operational improvement and expense reduction. At the end of the day, we're bringing institutional. Right now, the property manager the seller is using is more or less a mom and pop type of property manager. We bring in institutional property management company to help us run it. We work with them over the years. There's the same company, that help run other properties that TeamVelu and I are involved in. We have good relationship, good experience. They know how we execute. They know our expectation, and we know how they operate, and it makes it easier to run this property. As far as exit, that comes to 3 things, right? One thing is hold the deal for at least 12 months, cash out at least 18 months, then do cash out refinance, and then hold it for another year and sell it. If you're going to pull a good money out, by the way, just as a real life example, TeamVelu and I are involved in a deal in Amarillo right now. That deal, we're in the middle of refinancing right now, and we expect at least 50% cash out refinance on that deal. Which means by end of next month, a lot of investors on that deal will be, getting a good chunk of their money back. On top of that, they've already been getting good cash on cash on that deal. I think when all is said and done, they will have gotten almost 100% of their money when the refinance is done. So it's been a true great experience. Anyway, so option 1, do cash out refinance. Option two, if you cannot pull out a good chunk of money, then just let's just sell it in 2-3 years and move on to the next project. Our goal is to double your money, and if we just can just double your money in 2-3 years, then let's double and move on. If what's come to what, we hold it for the entire 5 years. Just keep in mind, the 5 years is the worst case scenario. It's not the best case scenario. Keep that in mind. In other words, if everything stays as is, the way it is today, we're likely going to exit this deal way sooner. Let's go next slide, please. I'll hurry up with the rent. I think I just want to mention one thing on the rent. Go to second slide, the second one, 2-bedroom, 2-bath. Guys, just take a look at this. I'm not going to go through this in more detail. I just want to point out 2 things. All these rent comps you're seeing here on this list are older than us. There's only one that's newer than us, and that's I believe the wood at Farmer. Everything is older than us. So, as an example, Riverbend, which is the third one on that list or fourth one on that list, that's a 1971 built. If a 1971 can get that rent into getting this, you know there's something amiss, because I can guarantee you 1971 is not coming with the same amenities that we do. And so there's just room to grow in rent. This goes to show you how much room we have to grow in rent. And I gave you the backstory, why the rents are so low. It's not like, it's a bad seller or a bad manager or anything. They were just caught up in the middle of COVID-19. Let's do the next slide. This is just more direct to show you that, and we'll share this with you so you can see in more details about it. Okay, sales comp, the same thing. As you can see, with the pricing we get for a good deal. With us, we focus heavily on off-market deals. Most of our deals, 80% of all our deals have been off-market. This was off-market, and we believe in the best way, sometimes the best way to get a good deal is through off-market deal. And the sales price reflects on that. This is a unit mix, so you can see. This is a 5-year cash flow. I'm not going to go into this detail because of time, but if you have any question about the 5-year cash flow, please feel free to give us a call anytime. As you can see, you compare that the CoStar report, we shared way earlier, like, the rent growth was like 8%, with us we just assuming 4%, and then we're reducing down to 3%. After that, which means we're not being aggressive with our rent assumption in rent increase, which another reason goes to show you how we're being very conservative with this deal. All right. Is that right, or Velu?
Yes. Yeah. Thank you.
Slide.
Thank you, guys. Thanks for that great information, Jack, about the property, business plan, what we're going to do to the property, how we're going to improve, things like that. So first off, I want to summarize this deal. Okay. It's a Class B at 2x in 5 years. And there's a refi component in there where you can get almost 75% in year 3, which means you can take that money and invest somewhere else. It's a core A, Class A property located in great location, close to your downtown and the business district, right? The rents are below market, and there's plenty of upside in other income opportunity. And if you look at the 5th bullet point, you saw we are going to hire a very reputable property management company, which has returned great returns to our investors. And then the sponsorship team. Sponsorship team is very strong with Velu, Jack, and I. And then 100% cost save. And the reversion cap rate is conservative as well. One thing I do want to see is when you go through the financial, the slide before where Jack was showing the financials, just go through and see how everything is so conservative, right? The break-even point is at 65%. Year 1, we are not projecting any increases, and this economic loss of 20%. Things of that nature, and the reversion cap rate of 4.75. Okay, so go through this slide and then call us if you have any questions. Next. Yeah, so the investment timelines is like we're gonna start the I think we need to, the webinar day is today, which is 30th. So we need to make some changes to this slide. We'll make that and then we'll send it to you, and then we'll start capital raise, and then we're planning to close on 30th of June. Next slide. So what is the benefit here? As we mentioned earlier, the cash out refi in year 2 to 3 projected to be around 75%. So that's one benefit that you see, and then the other benefit is cost seg. So makes it very attractive for you to consider this opportunity. Of course, how the breakdown of capex. This is a breakdown of capex. How we're gonna spend the 744,000 that was showcased earlier. Next slide. So fees, again, property management is 2%, not 3%. So we'll make the correction to the slide and we'll send it out. Asset management fees is 2, acquisition fees is only 1.5 with 0.5 capital events fee. Velu, you want to talk about that?
Yeah, thank you, Raj, and thank you, Jack. And actually, the investment process is basically review and sign the e-sign documents on the portal, and then you wire the funds based on the wire instructions you get. So basically, this particular property is a A-class property, and people are not, like even a chief executive officer of a company who wants to move from Boston, and he said, "Hey, can I get the A-class property where I can stay? I don't want to buy a house." He's capable of putting in maybe the $4,000 for the renting an apartment like this. So that is what is happening in this market. And that is why we have moved up from C-class property, which probably is, saturated with with opportunities, I think. And anyway, there's a lot more growth which is anticipated for Dallas. And because of the interest rate hike, we are going for interest only, and it's only for 3 years. And before that, most probably it will be sold. And let me go through the questions once I cover the next slide. Next slide is basically how do you need to go to teamvelu.invportal.com, where this particular webinar is also going to be saved, and send an email to Ramu, and he will talk to you one-on-one, and if you have not talked to us earlier, and if we have been doing business earlier, you can straight away go and start the e-sign process as well. And other than that, there are a few questions. The first question, how many GPs are there? Definitely there are a lot more people raising the money, and they're all minor GPs, but main sponsors are Raj and Jack, and there are quite a few others like me, which Raj will say, answer. And the asset management is not a company. Jack and Raj will be managing the asset, which means us managing the property management company. And I will ask Raj who are the property management company they are considering. And go ahead, Raj.
So asset management company is, asset management is Jack and I, but the property management company is Citygate. It's now acquired by Asset Living. Asset Living is one of the large property management company. They operate throughout the US.
Yeah, good. So Citygate is a real good one property management company, and it is a Class A property, but you have a Class B share. That is what it is, Karnakaran. And Sashidhar, in fact, the quarterly distributions are going to be less than 1% for the whole year, the first year. Usually it is 8% and all that. So we are not really looking at too much of a cash flow for the first and second year. Second year, it is 2.5 or less than 3% for the whole year. So pretty much it is very insignificant or nothing. And eventually you will be able to see that the huge money coming in from the refinance. So 75% of the money is given to you, and only 25% of the money is working for you at 100% efficiency, right? That is what it is. And other than that, when is the deadline to invest? Usually we want the money to be in about 2 weeks time. And if somebody needs a few more days, we will, that will be okay. And probably before the 20th of June, we would need all the money in there. Minimum investment amount is $50,000. And how much are the sponsors personally investing in this deal? Raj and Jack, can you tell us the total amount? Actually, from my part,
So
we
at
will
least
yeah.
$500,000. At least $500,000.
At least $500,000, right?
Mhm.
And other than that, I think pretty much we have answered the other questions. Will there be an increase in interest rate affect the quarterly distribution? That's what I addressed as well. That's why we are going for interest only. So is the 75% refinance cash out dependent on the value of the property going up by year 3? And actually, like Jack talked about how much more room there for increasing the rent, because the average rent per square foot is much lower than the other properties, comparable properties. So that is what the Citygate will be implementing for us to be able to add value, to be able to get a good price to sell in year 3, if not a refinance. Right? That is that is all the questions. Please send us your questions separately. Ramu, would you like to take the floor?
There's another question. What is the minimum investment amount? $50,000 is the minimum investment amount.
Yeah. And is there anything else you want to say, Ramu? And you can also thank Raj and Jack and also the investors. Go ahead.
Absolutely. Thank you to all the investors and everybody who came on this presentation and shared your valuable time with us. Our contact information is right in front of you. Feel free to call me or text me with interest or questions about this presentation and this investment. I know we did say that go on the website and complete the paperwork and the wiring. We will be adding that to our portal in the next 1 to 2 days, but it is open for you to go and review this presentation, as well as the subscription documents are on there. So you can review the paperwork at this point and reserve your investment slot. So all of those are on the portal already. Soon, either tomorrow or the day after, we will have the e-sign paperwork and the wiring instructions updated as well. Any further questions, please give me a call. Thank you, Raj, and thank you, Jack, for your time and for the presentation. I look forward to being in with all of you in the near future to talk more about this investment. Thank you.
Okay, this is good. This is recorded and it will be shared with all of you guys once again, and also for the people, those who could not attend. And it will also be posted into the portal. And those who do not have the portal access, please sign up, and you will have access to be able to review them and then start your paperwork. Thank you all very much, and good night to all of you.
Thank you so much.
Thank you, sir.
Okay. Thank you very much.
Bye-bye.
Bye.